Hello, everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. So you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard with some of the tools in our WebTrader platform and app that make the risk management side of things quite a bit simpler. And as we go over the concepts and trading ideas, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick from our main website, if you do trade from a mobile device and you want to make use of the special tools and the free signals, the different information that comes in to our WebTrader platform, our app has those same functionalities. And so you're welcome to trade from the MT4 and MT5 platforms and apps. But if you want the advanced functionalities with the signals and market buzz, etc., then you can make use of our app if you're trading while you're on the go, and also our WebTrader if you're trading from a PC. And our app is found under trading platforms. And you could just search in the major app stores, you'll find it, or you can follow the links from here to download our app. And like I said, the same functionalities that we're about to use in the WebTrader are found in our app. Now, to log into the WebTrader, you just go to the upper right corner here. And whether you're on MT4 or MT5, you can switch between those from the WebTrader and from our app without having to switch platforms. So it makes things simpler when you have different account types as well to trade directly from the WebTrader and our app. Now, today is a technical analysis webinar, but I always like to talk a bit about the fundamentals before we go into the technical look on the charts and in our technical signals to get an idea of which way maybe is the wind blowing, so to speak, in terms of sentiment for the day. And that many times can help you pick directionality even before looking at the chart, and then use the technical analysis to zero in on preferred entry points and exit points in the direction that maybe you already have an idea you might want to trade. Okay, Jeremy, just contact your account manager directly or our support team, and they'll straighten out any issues you might be having with your signals. I think there might be a limited time that the signals are active on maybe on demo accounts or unfunded accounts. But if you have a funded account, I think the signals should continue to run as long as you meet the minimum deposit requirements. But like I said, just check with our support team and the signals should be there for you. Okay, so in terms of the fundamental news today, the way I see it, a few things. One, there's a bit of tension with the tech sector today, which is causing, I see NVIDIA opened today when the US market opened. And I mentioned NVIDIA because it's been kind of leading the way with such a large bull run with the tech companies and the US 100 in particular, but many stocks have followed that momentum. And NVIDIA opened today down over 4%, near 5% down. I haven't looked in the past few minutes to see where it is, but there's obviously some negative pressure there on the tech sector. And there's some headlines about this tension arising a bit because of some comments both from the current U.S. president and also from the front runner to maybe be the next U.S. president, both talking a bit about clamping down on companies that are outside of the U.S. in terms of controlling the market on computer chips and such with this big AI boom. And so that's created maybe some regional tensions, and that's what I read a bit in the headlines right now is causing kind of the volatility to be up a little and a bit of a pullback on some of the stocks, and particularly in the tech sector out of the U.S. And usually when that happens, you see a bit of a strengthening of the U.S. dollar as a fear response, because as stocks sell, especially U.S. stocks, well, then the margin currency there's the U.S. that is then being bought if stocks are being sold. And so the U.S. being a bit of a safe haven currency as well. Now, that's kind of a little bit of a backdrop as we go in to do our technical analysis. And then some economic announcements today came in a little weaker than expected out of the UK on some of the inflationary data. So that could cause a little bit of a weakening potentially on the pound. And then we saw some data a little better than expected, particularly housing data out of the US and some inflationary data out of the European Union, which could serve to strengthen maybe the euro and maybe the USD against the pound. And so the USD then has a couple reasons to be strengthening right now. Fear globally a bit in the tech sector, which could strengthen the USD as maybe a safe haven currency. Also better than expected housing data out of the US, which could serve to strengthen the USD a bit. So if we look at commodities against the USD, maybe the technical analysis, we're looking for the USD to pull those down a bit. If we're looking at the major indices, maybe we're looking for those maybe to pull off their highs, that sort of thing as we go into it. We'll see what the signals are from Trading Central if they agree. But it's just in a general sense, maybe we're looking for certain instruments to be weaker and certain ones to be stronger based on that fundamental analysis review. So then we can start to look at signals. So if we go to GBP USD, for example, we said that out of the Great Britain, the data was a bit weaker than expected. And we know the USD, as we just reviewed, has maybe multiple reasons to be a little bullish right now. So let's take a look at the pound against the USD. It's always nice to try and find a weak horse against a strong horse. And so in this case, maybe fundamentally, we think the pound could be a weak horse and the USD could be a strong horse. And this is a 4-hour chart, candle chart that we're looking at here. And we see on this past 4-hour candle, the pound has been dropping against the USD from this high up here. So it's not unexpected. It's the first I've looked at the chart actually today, but it's not unexpected that that's what we see over the last several hours, 4 or 5 or 6 hours, the pound pulling down against the USD since that data came in earlier today. Okay, and with the backdrop of the tech sector selling off a bit and the USD strengthening. So this is fully expected, and I could have been on making a move like this based on the fundamentals several hours ago, and you'd be way in the money already. Okay, now let's see what the signal is from Trading Central, which you click on here for the signals, and it should load in your order window. I can see why the signal's not coming to fruition. They've got a buy signal here, and it's moving the wrong way for that signal right now. So I think the signal maybe came out before that data, before the fundamental news. You can see it was rising here, back here. But since reaching near the take profit mark up here, it's pulled back. And I think this signal is something I probably wouldn't be in a hurry to follow at this point. And this just serves as a good example as to why maybe you don't follow signals blindly. The signal was a technical signal from earlier in the day, and it really was climbing strong. It was a good signal at that point. The fundamental news came and changed it, and down came the pound back down. We see the support level is here. This was the old resistance / support, this pivot level. So we see the drop has slowed as it reached that level, but it doesn't mean it can't break through and head towards the secondary signal, which would be if it's below the pivot line, they say sell and take profit down here. So if this is going to continue to drop, it looks like it could drop towards 129.65 or lower, according to these support and resistance levels right here. Okay, so if indeed I wanted to sell on this, I'm looking down around 129.65 based on the signal window here, and this being a support level from the past. So if I want to draw a line based on the technical analysis, that's down here. Okay, 129.65 is right about here. Okay, and so this has got a ways to go before it reaches that pivot line. Looks like the momentum on the buy signal died just before the suggested take profit. So it looked like a good signal, and the news came in, and down it comes. Okay, so this looks like a situation where I might think that it's a downtrend, and that it might test the support level down here from this signal here, from below the pivot line down to this support level here. So if I was going to sell on this, I'm setting up take profit down around 129.66 based on the technical analysis and the current downtrend. Okay, stop loss would be back up above what I would view as a broken support. So let's go back on the 30-minute candles, and I might draw a line and say, okay, if it goes back above here, I'm probably out on this trade. If this was a support, broke through the support here and dropped. So if this goes back above this area, then the downtrend has ended and it's uptrending again on the small candle. So I might put my stop loss if I was selling. Now, I'm not saying you have to sell, but it is a current downtrend. And before we looked at it, we expected to see that, okay? And so it's kind of confirming what we already thought, that the USD should strengthen against the pound. Weaker than expected data on the economic calendar today out of Great Britain, like we said. Stronger than expected housing data out of the US strengthening with the fear response, etc. So we talked about that before we looked at the chart. So since the downtrend matches, then I'll simulate a sell here. So stop loss then above 130.20 to get above that broken support on the 30-minute candles. So let's say 130.24, something like that. So my risk reward, I about double the potential profit compared to the risk here. Now I just need to adjust my trade size to be in a situation where I'm risking the amount that I'm comfortable with. And maybe I want to risk 1% of my account, or whatever that amount is for you that you're comfortable risking percentage-wise or dollar-wise on your account. So if I want to risk around 640, it would be about 1% of my account, then I can just adjust my trade size. If I do 3 lots, I'm risking 579. I can go a little bigger. 3.25. I'm risking just over 600, 627. That's a little less than 1% of my balance. So if I'm comfortable with that, then I go ahead and sell. Okay? And so I've got a trade then on GBP USD that is certainly not based on a guess. It's not based on just emotion. I'm looking at a chart that's currently downtrending. I'm looking at a chart that's moving in the direction that maybe from a fundamental perspective, we might have expected it to be moving anyways. And from a technical analysis perspective, I'm able to have an opportunistic entry point above a support level that if it gets near the support level, I can take a nice profit without having to break the support level. And I can get my stop loss a short distance up and still be above a broken support level here. This was support where it was having trouble dropping. That news came in, economic data, broke the support level with momentum. So we're in the direction of the downtrend without having to risk much to get above the broken support with a larger potential take profit without having to break below the lower support. Okay? Any questions, comments on that setup and why it might make sense to trade in the direction of the downtrend in terms of this simulated example? Okay, so Jeremy, I was just reading through. The reason I was quiet here for the last minute or so, I'm reading through your question, which was pretty detailed. I'll answer a little more general about gold. Jeremy's asking for the rest of you, does it look like gold is going to pull back some more? Before you asked that question, I was already talking about the USD strengthening a bit today, maybe pulling commodities down as it strengthens. And so, crude oil is a different situation. There's tensions in the Middle East, and crude oil could go flying up even against a strengthening USD if there's some fear about supply disruptions, that sort of thing. But other commodities, if not driven by that type of regional situation, if the USD is strengthening, you tend to have the commodities maybe pull down against the USD as that happens. And so it might make sense that gold could in the short term be pulling back a bit. But in the bigger picture, if there's any more weak data out of the US, today's data was stronger than expected on the housing market, which is maybe affecting its pull on gold. But if there's weaker than expected data moving forward out of the US, I could easily see expectations of a rate cut in the US then going up. And if there's expectations of rate cuts in the US before the end of this year, that could serve to weaken the USD and allow gold to climb up in the bigger picture. Okay, so some of those higher numbers you were mentioning there, Jeremy, about could gold reach these different numbers? Certainly it could if the USD starts to weaken with anticipation of rate cuts, for example. You know, those rates were increased to try and bring down inflation, which it's come down quite a bit. If the rates start to go back down, the reverse could happen, and gold tends to be a safe haven when there's fears of inflation. And so if indeed rate cuts start to occur this year, I could see that as an impetus to be a reason why some might search safe havens like gold once again. Okay. All right. So if we're talking about gold, let's bring it up. We'll take a look at it. And so I think we have a signal on gold. These signals are more short term, by the way. We're not talking way down the road. And so exactly what I was saying, what I expected to see, the USD strengthening right now. And it looks like this movement is headed towards, this signal said to sell, and it looks like it could be on its way to these take profit suggestions down here, which are the next support levels on the chart. Now, when you look at this red line, you don't see support on the candles because we're looking at a smaller time frame here. But if we went to a larger chart, you'd see that these red lines, if we look back in time on the chart, are a support level from further back in time. That's why these lines are drawn. They're technical support levels on the chart, meaning a spot in the past where when the price hit, it had trouble dropping further, at least temporarily anyway. So it looks like gold's around 2460 right now, pushing just below, and it looks like the folks at with the technical signals over at Trading Central, it looks like they expect this to push down towards 2444 to 2430. So we're talking maybe another $30 an ounce dropping in the coming day or so is the expectation, excuse me, from this signal. Okay, and so that fits our fundamental perspective. Before we looked at the chart, we just said that, right? And as I started the webinar, I said it's a good idea to review the fundamentals a bit, and we kind of decided before we looked at the charts that it made sense for the USD maybe to be strengthening, pulling some of the stocks down, the major indices, maybe pulling some of the commodities down, maybe with oil as an exception. And so that's what we see. So easily an hour ago, you could have been selling on gold, or several hours ago, and you'd be right here in the money. Okay, and so personally, I think this could continue to push down. Now, if you don't feel that way and that you already missed all this dropping, you know, these are 30-minute candles. Look at all this dropping since those numbers came in. I mean, we already dropped $20, $30 an ounce. If you got in earlier, great. You could take your profit already on a short-term move. I think this could continue to drop, and that's not for me to tell you to sell. I'm just saying from a technical perspective, as we look at the 2-hour candles even, you see there's room for this to drop. This was a bull candle that came up, and many times once support levels are broken, you can see a reverse back down from a rapid rise to a rapid fall if the conditions are right, which it seems like there are conditions here for the USD to maybe strengthen a bit in the short term. Okay, so if indeed you were selling on this, we could start to look at this signal around 2444. Okay, that's here. I'll draw a line on that. And you could see why they're saying to take profit maybe in that area. 2444, you see this was resistance in the past on the 2-hour candles, resistance, 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 and then look at the breakthrough candle. The breakthrough candle is a candle that took momentum and broke the resistance and then climbed rapidly. This is what we see on breakthrough candles. Now, if this is going to reverse that, it might find support at the same spot where what used to be resistance. So the take profit on a sell right now, technically speaking, looks like it could be around 2445, could make sense, just above this support at 2444. Okay, so I'll go with the momentum with this since the fundamentals maybe say sell here. So 2444, I'll raise this take profit to 24.45 to be just above that support level, so I don't have to break the support to hit my take profit. My stop loss, I think I would put, if I draw a line here, just above this broken support. So right back above this candle, okay, 24.65 maybe. I don't need it as high as 24.80 something, because this is more of a scalp move, a short-term trade. If it reverses and goes back above this line, then for a short-term move, I'll say the momentum changed already. I'll get out, okay? Opportunistic from a possible profit to possible loss setup here. I just need to adjust my trade size to be the amount that I'm willing to risk now. So if I go to one lot, I'm risking a little over 600. That's less than 1% of my balance. To go after more than double that, okay, I'm looking at more than 2% potential profit on my account. For me, that's a pretty solid move. I don't need 10% gain on one trade or something. So a 1%, 2% gain, it's a nice target on a short-term move. Even less than that could be a nice target. And so I go ahead and sell in the direction of the current technical momentum. Now that could change, right? There's no guarantee of profit on any of these, but the point is we're trying to get in the direction of the technical trend, which is a downtrend right now in the short candles. By short candles, I mean 30-minute, 1 hour. For a short-term move, that's a large downtrend, okay? We're in the direction of the momentum, technically speaking, and the trend. And then fundamentally, if you feel like the wind is at your back to blow this down further, which it feels like maybe it is, then that's the move to make, okay? And hopefully when you put together the fundamental analysis with the technical analysis like this, and with the proper risk management, if you try that 25 times, 50 times, if you can win 30 out of 50, that's a good number, especially when you're setting it up where the take profit maybe is a little bit more than the risk. So even 50-50, you're profiting, okay? But hopefully you can have a higher percent success rate than that, get up near 60%, something like that, if you can get yourself in the direction of the fundamental news with the proper entry points from a technical perspective, okay? All right, any questions, comments? I'll pause for a moment, okay? And just to follow up on the talk about the gold move, you know, short term looks like it's moving down. And so that's what we're looking at here in a short term move. Longer term, you could be trading the opposite at the same time. I could have buy positions expecting with interest rate potential cuts in the US later this year, that on a longer term move with maybe a further stop loss and longer take profit, that while I'm selling in the short term, I could be looking the opposite direction for gold to go in the longer term with bigger macroeconomic policy ideas with, you know, potential rate cuts, etc., maybe looming. All right, so you know, we could look at some other pairings. Again, if you're expecting the pound to be weak, and you also understand there's potential fear out there, I could look at something like GBP, JPY. Why the JPY? The Japanese yen tends to be a safe haven currency. When there's fear on the markets, the yen is one of those currencies that tends to strengthen, okay? So if I expect the pound to be weak and I think there's fear on the markets, probably this is downtrending. And before we looked at it, we could guess that, right? And look at the downtrend, okay? So this is the sort of thing as a trader, if you start to learn to pair strong horse against weak horse based on the current fundamental news setup, we would view the yen as a strong horse right now, safe haven currency with a bit of fear out there now, and the pound as a weak horse, weaker than expected data out of Great Britain today on the economic calendar. So then you could have predicted that this would be dropping several hours ago, because it was several hours back that weak data came out of Great Britain, okay? We're talking 7-8 hours ago, okay? And so if you go back 7 or 8 hours, you'd have gotten in up here when this momentum was just starting. When this support level, if I draw a support level here, broke. Okay, this was support in the past. It had trouble staying below this price. Support, support, support. Was staying above this price line, tested it, bounced, and then broke. And that would have been the clue, technically speaking, that that's a strong downtrend now. And down it went. And that happened to pair with the economic data that came in today. Okay, and so, and the fear that the day really opened with from yesterday. Okay, so when you start to put things together like that, now instead of just making an individual trade, you have a trading strategy. And you see how nicely these are starting in the right direction. These are the trades we simulated just in our session. And you could already close these and make $400, $500 profit in a short period of time because you did a few things on your checklist before opening the trades. One is, what's the current momentum technically? What's the trend? Is it in the direction of the fundamental news? And if so, then maybe it makes sense to make that move. And then you can quickly take a quick profit as a scalper and say, okay, I'll add $500 profit approximately from this trade. Okay, there, I've already closed. Now I've covered my risk of only around 600 on this trade to my stop loss. So now I can let this one run risk-free even. Okay, and if it goes to its take profit, I make another nice chunk of profit. If it goes back, at worst, I've about broken even. And so this is more short-term trading strategy, short to medium term. I'm not looking for these particular trades I simulated to go for days or weeks. It was based on the current momentum, the current fundamental news situation, the strengthening of the US dollar that we talked about before we even looked at the charts, and the fear environment that's there today. And then we found good technical entry points and went after it, okay? And so, you know, you don't always win as I'm simulating it here, but you should be able, hopefully, to come out more times on top than not if you put together the pieces like we simulated in the session, okay? All right, everybody, so I think this is a good place to stop. We've gone through the idea that I wanted to get across in the session, which is looking at that fundamental momentum. What direction is it going based on the recent announcements and such? And then using your technical analysis to really hone in on my entry point, my exit point, which then determines my trade size to get the risk amount I want for those entry and exit points for stop loss and take profit. And that in that way, you can set things up kind of in a robotic fashion, going through your checklist of what way is the wind blowing today, what are my technical analysis entry points and exit points, and then what trade size makes sense, and then you make the move that makes sense to you. Okay. All right, everybody, I think this is a good spot to stop. Thank you for joining. My next session will be tomorrow, earlier in the day. 11 a.m. UK time, and we'll spend more time on the fundamental analysis side in tomorrow's session, but also we'll touch obviously on the technical analysis as well, because the two go hand in hand, really. All right, everybody, thank you for joining. Bye for now.